Hey guys, good morning. Eagle Trading. It's 10:19 a.m. on June 28, 2020. Trying to get an idea of what the market's going to do next week. And this is the first time, and we talked about this before, that we've broken this channel since we started this rally, this yellow kind of wider macro upward channel. And it's not panic yet, but I'll tell you there's some different shapes that I'm not liking that I'm seeing, and we would need an immediate rally Monday or Tuesday morning. Not Tuesday morning necessarily, but Monday. We need something very early next week. Either a strong surge to the upside or some resiliency to more of a sideways pattern to kind of negate what I'm seeing. And I'll show you some of the configurations that I really don't like in the market. It probably has to do more with the MACD expansion that we're seeing. So if we look at the configuration of the sell-off in the market, we've had pullbacks along the channel line before, right? We've had these kind of roll back over from these little highs that we've seen, and we've seen that in this area here as well. The difference is the shape and the MACD configuration that we've seen has been very tight in these pullbacks, and this is the first one that we've had a pretty sizable crossover with the trajectory that we've seen, and then we're having some expansion where you're starting to widen in here. And that's a little bit of a concern for sure on the market. There's another concern as well when you look at the price points on the S&P 500. I don't want to keep beating a dead horse with the S&P, but it's the focus area for now. And I think we should continue to look at it, but we'll also look at the Qs and the NASDAQ and why the NASDAQ's been so strong. And we're going to have to see the NASDAQ start to break here too to get a bigger pullback in the S&P. Because we're not seeing the volume expansion that we've seen in here on a huge sell-off. So, the configuration's there, but we're not getting the volume. We're not getting the fear that we see in the market. Believe it or not, the VIX is still slightly elevated, but we're not seeing anywhere near the panic that we saw, obviously, at the onset of this pullback. But we do have a break, like I said, and we also have a break inside another sideways channel that would lead me to believe that regardless of what happens, we need to go lower to shake some of the weak hands out of this market before we can get another move, at least sideways, if not an attempt to kind of break this descending channel now to the upside that we've seen. And given the backdrop of the economy and the political implications that I was more concerned about, and I don't want to say that, we want to trade the economy. We want to trade the market. Definitely want to trade the market. It's kept us safe on the way up, because if we traded the economy, you would have never had this move that we've seen, this monster move in the market. So my concern here is that we look and we zoom in on SPY here, and you can kind of see these little price points, right? We literally just hit another little channel, and we don't need to keep adding lines in here for confusion. But if you look at the light blue line that I just drew, we literally just touched a little triple channel bottom right here on Friday, which would indicate that we have to get a move quick on Monday right off the bat. Some at least a sharp move up, and then maybe holding a majority of those gains, and then some confirmation on Tuesday. Some sideways action's fine, or at least slightly lower, slightly higher. We just don't want this crazy intraday volatility swings that we've seen in prior moves. So here's the problem: that at those three price points, with this little bit of a kind of end pattern that we're starting to form, we've seen some weakness on the relative strength on the S&P 500. So these are the correlated price points, 1, 2, and 3. And here, in fact, 1 was up here, but if you even look at it this way, you're seeing a lower level of price, even though the higher end on the right side, between the three price points, you're seeing the lower end on the RSI. So theoretically, you should have probably seen something like a move like this, where the bounce would have been a little bit higher here, and then a little bit higher here, and then either stopping right in the line here or just slightly below. But instead, we're kind of seeing the opposite. We're seeing some directional changes across to the downside, and then you're also seeing a lower low, which broke this little prior channel that we've seen on the RSI. So that's a little bit of a red flag. What we've been using too is obviously the advanced decline line of the New York Stock Exchange, the market breadth, to kind of give us an idea. And that's kept us safe too, because it's worked like clockwork. But we're seeing that trend break as well. We saw some lower highs on some prior rallies, and now we're seeing a break of the red line channel, and now we're touching down to some much lower levels here, which leads us to believe that the market's being held up by some, very few stocks in the S&P 500, and then obviously the rotation into the Nasdaq, which we're going to have to see break before you're going to get a continuation move to the downside. The funny thing is, when you think about it, we've kind of changed trajectory. This has been a sharp move to the downside, but this is actually, even though we call it a V, it's been gradual, and that builds strength, but it could also build strength when we do break to the downside as well. So my opinion is that we're definitely going to have to go lower on the S&P. It's just not healthy. If we do bounce Monday morning, I'll probably short it. I'll just have to figure out what area to short it in. 307 is going to be a big area of resistance for a while. And we said the bulls lose control under 310, so they've lost control, and the bears actually have control right here. 300 is a big area intraday of volume that I've seen on the past few days. So that's obviously a battleground area, which we closed right on literally 300. But just the shape of that alone tells me that the expansion we're seeing in the MACD is that the market's going lower. Even if it pops first, it's going to go, most likely going to need to go lower at least to shake out, like I said, some of the weekends. When we look at the HYG, high yield growth, high yield ETF and the bonds, same kind of configuration here, where this one's been held up a lot with some buying by the Fed, some backing of these corporate bonds. So you've seen the moves here, and now we've kind of changed channels, right? We broke from this bottom line channel, we broke through, and then we hit the top end of this descending channel, and now we're breaking that. So if we kind of remove, we're right on the edge of this channel right here. But once again, when we look at the shape here, we've had these moves, right, before in pullbacks, right? Sharp move up, pull back, bounce, sharp move up, pull back. Could we bounce here? Well, the shape, once again, of the MACD is concerning, is that we're seeing that same type of shape where we have a normal pullback here, right? And then a bounce up, and look at this nice tight formation. Then we get some expansion to the upside, and then you break channel here, break channel on the MACD, but once again you're getting expansion with the trajectory that we don't like to see. When we had this bounce in here from this lower price point, the MACD was kind of flat on the positive side. Now you're expecting a bounce, but it's going to come from this type of trajectory on the MACD. Not likely unless you have some type of a news event. And then once again, same thing, lower price point, higher price point, right? We should be somewhere up in here on the MACD, and we're breaking, on the RSI, and we're breaking on the RSI lower, very similar to the S&P 500. So does that mean the market crashes? Well, no, it doesn't mean the market crashes. In fact, we're still seeing pockets of strength, and we can look at stuff like Microsoft. You're going to need to see Microsoft break below its momentum line. It simply tagged the momentum line on Friday. It's still well within its channel, and the move that we've seen is a strength move, gradually grinding to the upside. Very healthy move on Microsoft. But Microsoft has an inner channel right here, right? This is a momentum channel. Every time we touched it, it wanted to go to the top end. We've put some tails through it, and then we've broken through a few times, but all we did was touch the lower channel, right? Lower channel, lower channel, lower channel. So most likely this is going to break the momentum line and touch the lower channel, which puts us into the 189, 190 area on Microsoft. It would seem that it would need to do that. That this is either the very beginning of a big market sell-off here, which is finally going to grab the Qs and get some redemption liquidation on the Qs, or you're going to look at stocks like Microsoft that are canaries in the coal mine, and they're simply either going to hold this momentum level or simply go down and touch the channel line here. Without breaking this channel line down here, you're not going to get a big market sell-off. So it'll be interesting to see how this correlates in the S&P 500. Even we look at oil seemed to want to rally. I was watching oil intraday, every tick on it on Friday, and oil's at a crucial price point here too. But if you look at oil, it literally just kind of bounced between its 200 exponential moving average and its 20 days. So now it's just in this little tight wedge between the 200 and the 20, right? It hasn't broken the 20 on this move up, and now we're literally, and I drew a little bit of a line here to kind of show you, It still didn't even break its low from the prior day. So we're in a little bit of a battle here between the 200 exponential and the 20-day exponential. But oil so far, you're going to need to see oil break as well, I think, before you get a bigger market move to the downside. It's still well above this 45-day moving average that I've been using, the 45-day exponential. In fact, like I said, it's just wedged between the 20 and the 200, which is not a big deal on lower volume that we've seen. So oil seems to want to go higher here. So, if the market gets a big decline again on Monday, do we play UCO on the rebound? I think so. That's what we want to start doing. Is you can tell I was trading this on Friday, but oil wanted to go higher. It wanted to push higher. And then we find the theme stocks. There's theme stocks that seem to be immune from the market. With all the liquidity in the market, if the S&P 500 is selling off, we don't want to buy stocks like Microsoft and Amazon and Netflix. I like those stocks. We've had trades in those, but now the market's shifted gears here, and we need to shift gears with the market. So what do we play? We play theme stocks. We play IPOs. There was an IPO out on Friday, API, and what did this do intraday? Just went completely oblivious to the market. It just ground higher intraday. And even though it opened higher than I wanted it to open, it started to create a channel here. You had to play this channel. This was money until we broke in here, and then the momentum channel kind of broke up in here. Let's get rid of this. We'll remove the steady set. So we want to play theme stocks, like the IPOs. How about Spotify? Let's see, here's the channel a little bit clearer, right? It started to get even stronger and create another channel. And then you just kind of sell it once it breaks that area. So, if you're in here or in here at 46 or even 47, once you start to see shape change, 48, man, you had 7-8 point moves, at least a 5 or 6 before you broke trend here, right? And then you just get out, and then we try to play it the next day. We'll figure out what it's doing. Look at Spotify. I was short this, but once you see the relative strength versus the market, you got to step back and say, this is one you want to buy on weakness. You just have to figure out, is this going to completely break to the downside? And you don't want to be in it the day that it does, but when it starts to do the things that we're seeing here, and look at this this is Friday's move right here, intraday on Spotify. Completely overvalued, ridiculous stock, but hey, if it's going to be, I'm going to play the stock the way the stock moves. I'm not going to try to play it based on fundamentals because, price precedes fundamentals. Eventually the fundamentals will catch up, but if this is how we're going to play stuff, then hell yeah, I'm going to be long Spotify intraday if it's going to show relative strength. And look at the move intraday. If we add a study set, a comparison of SPX intraday, this is crazy. But you have to acknowledge it is what it is. Let me see if I can do the intraday one day, and then we'll do the comparison. So here's the comparison of S&P 500. So, right, they're moving down together in tandem, right? And then they kind of bounce together in tandem. Then they kind of pull back and then tandem. Then what happens here? You get a big move up in Spotify and a pullback, and then the S&P 500 fades into the close. And what does Spot do? Rages up and hits an all-time intraday high while S&P is hitting the all-time intraday low. Whether it's short covering, it doesn't matter. If the shorts are going to keep piling in, waiting for this to break, and they have to get squeezed at the upside, let's partake in that. Let's play those moves. Shop is another one. These are stocks that have a stronger theme than the market does, right? Looks identical, right? What's going on here? As this starts to pull back and make lows, Shop is moving higher. We don't have to hold it overnight, right? We can play this little wedge in here, this little trend move. Right? Bounce, bounce, bounce. Come on. These are unbelievably strong theme stocks. And there's a handful of them too. There's a lot of them. So, same thing we look at GDXJ. GDXJ, just like everything else in the market, when the market sold off recently, I got caught in JNUG and I got smashed pretty good. But, let's get this stuff out of here. But, there are times where GDXJ and JNUG will counter-trend the market, and we're seeing it recently. We've had a correction in JNUG, and we think that that's already been washed out. So, yeah, if the market does pull back, JNUG can be an interesting buy here, but we have to play the channels intraday. We don't want to buy and hold these just yet. And we've seen a big move in JNUG recently when the market corrected to the downside. And it's, you can see, right, 3 progressively lower lows. But each time we pulled back above the support level, close, close, close. In fact, we closed towards the high end on Friday. So that leads me to believe that, yeah, even though there was selling with lower lows in JNUG and GDXJ, which they kind of track each other, the progressive move on the close has been higher, 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 right? So once again, if we sell back off on Monday and GDXJ gets around 46.4, maybe closer to that trend line, it's been closing above that, right? So we get a pull back down to like 46 and change, 46.30, 46.40 on Monday. We're looking for intraday reversals and stuff like JNUG. We look at the chart from JNUG on Friday. What did it do? Once it found this shape change in here, it rocketed to the upside, right? So that's the stuff that we're gonna have to focus on. We can't be focusing on, the Amazon, because if those are starting to break in here and have potential to go much lower because they've been holding up so well, this is the kind of stuff we're wanting to, we break trend here, we back test the line, right? We break shape, bounce, bounce, pull back, back test, and then rocket to the upside. No matter how you look at it, even if you look at it from like a horizontal perspective, here's the break on the pivot here, right? Before we went lower, when we just look at this little area here, we could say that we broke in there. And then once we go back to the upside, right, we can say this is a break there. Once we go back to the upside, this thing, actually that's the wrong date there, sorry about that, guys. So here's a little wedge in here, right? And then we break. Okay, let it go, let it go. But once you go back up there and then back test the break point and then go higher, this has showing some relative strength and wants to go higher today. So you have to get back in this and figure out. In fact, this pullback shape change in here and then a retest, you could have gone long, and then your stop would be obviously the low of the day, 93. So you're buying in at 93.60, and your stop is, let's say, 93, which is 27 cents below. And then you have a move from 93 to, I don't know, 100, 101. Not a bad move, right? 7 points. So once again, we're going to focus on IPOs. We're going to focus on stuff like GDXJ and JNUG intraday. We're kind of going to avoid the Netflix and Microsofts here and the Amazons, I believe, because they may have to come unwound a little bit more to the downside, right? Closing close to the low of the day on a stock that we love, obviously. And we love Netflix too, but this is where a lot of the gains have been made. Could this just be beginning? Yeah, it could just be beginning a pullback here for sure. Once again, you look at the shape on Amazon, and we've had these nice little tight moves. It still doesn't have a MACD crossover on the bearish side, but big volume here. Like I said, you're going to need a jump right off the gate in SPY Monday morning to correct this move here, or else we're going to channel lower. And there's 2 channels that we're looking at here. We're looking at our blue channel, which puts us in the 297 area, which is our price target. And then you have the much wider channel. Can you imagine getting down here, how people would be panicking the market? 280, right? 281, 282, 283, depending on the time frame. Even 284, if we hit this channel line in 2 or 3 weeks from now, people would be freaking out. And we could extend this to the right. But in actuality, this sharp move here and this gradual move to the upside, if we kind of change the shape here, you'll see, and I'll pull back in, so just bear with me here. You'll see that, this big sharp move to the downside with increased volume, even if we change it to a Heikin-Ashi candle, you might have a clearer look at it, is really nothing but a sideways move now, or at least I'd have been happy with this if we never had this move up here, right? We never had this crazy move to the upside. If we just bounced, shot up here and bounced, and then started trailing along this channel here, I would have been like, that's healthy. We just got a little bit crazy here, right? FOMO, Fed speak, reopening hope in the market. So if we just got this over exuberant move to the top side corrected, and now we break down to this lower channel here, it could happen, and you just kind of go sideways for a while. I mean, that's definitely a possibility here, and it looks like that could happen. We could go down in the 280s here, but you're going to have to start to see a volume expansion. You're going to have to see a bigger MACD crossover, and you're going to have to see the Qs break here, and they haven't broken yet. They haven't broken at all. In fact, they're just basically channeling as well. And they just hit a different channel. That's it. We broke the momentum channel, right? We've kept this channel the whole time in the Qs. We broke it one time and then pulled back up, and we hit a new all-time high. But now there's actually just another lower channel line in here. It kind of goes from this close to just like that. So if we remove this channel, which I can easily duplicate later, you'll see that we have a touch point here, a touch point here, and we just hit that point again. You're going to have to see a close below like 238.55 on the Qs and a move back down below this channel line before you're going to have a huge sell-off in the market, or a bigger, more intense sell-off in the market. And so far that hasn't happened, but once again, you're going to have to get a bounce right away on Monday to kind of revert or redirect this move that we're seeing, because you do have some expansion here and some separation with an angle that you don't like to see, right? This angle was subtle when we crossed over. This angle was subtle when we crossed over. This angle sharp with expansion. So a lot of things point to big moves down in the market, not crashes, but more powerful, intense moves into lower channel areas. But you're gonna have to see some breaks and stuff like Microsoft, which is not broken by any stretch of the imagination. And once again, like I said, we shift our focus. We just change our focus to shorting the rallies or to playing theme stocks. So that's my take right now. Gonna have to have a big move up Monday. Indicators are that we're not. So we'll let the market tell us what it wants to do. But indicators from what I'm looking at tell us that this sell-off's a little bit different than all the other ones, since I put out the market high that I thought we hit on my prior video when I said the high is in the day that the Fed made the announcement, and we had the reversal island top on SPY. You just got to see the Qs partake here. If they don't, and you see the Qs just kind of hang out, you're just going to see some sideways move into the lower channel areas on the SPY. You're not going to get this big pullback everybody's expecting. So let's see how it plays out.